Hey, what's going on, everyone? So, I want to go over how to spot these market maker models. Let's zoom out to the hourly time frame. So, there are several ways that I use to spot these market maker models. One, I use internal range liquidity and external range liquidity. Um, I do this because once you learn how to spot it, you can see these market maker models everywhere. So, for example, here, this is internal liquidity. We rebalance, and then we target external. So, internal, we reprice inside, we sweep internal liquidity right here, and then after we rebalance, we target external liquidity. So, internal, external, these are your lows that you target. So this is a form on how, well, you know your order flow is bearish, right? Your order flow is bearish. There's your low. How do we do it again? We reprice inside, and then we take external liquidity again. So how am I using this? Okay. What happens is I'm waiting for these candles to come rebalance, and then I'm gonna wait for a time cycle. I use a time cycle during the time of interest to look for. So this is your manipulation. I'm going to look for distribution. Okay. So look, if you take a look here, these are equal lows. Let's zoom into the 15-minute. If you look, if this happened during a time of interest, look, it says 4:15. So at 4:15, London came, swept the stop hunt, right? Stop hunt right there. You can target external liquidity. Come sweep internal liquidity. You can target external liquidity. What happens here? Let's take a look. All right. So this is your Asia. I don't trade Asia, but I'm sure if you go in your own charts and you look for stop hunts with SMT, look at this. This Asia at 2045. There's a move. So your time of if you look at your times of interest, any your times of interest are between XX45 to XX15. You have a 30-minute window, and it happens every hour. I don't trade Asia, so I mean that you're gonna have to do some back testing yourself. Let's zoom back out. So I'm showing you internal to external range liquidity. Um, let's take a look here. What happened here? This is your 9 o'clock candle. If we look at our higher time frame, we should expect this retracement, right? Because you're not just going to get bearish candles the whole way. We're still bearish on the higher time frame. This is your retracement to rebalance. How can we gauge the order flow? We took this low, right? We took this low until we have CSD, because this would be considered SMT. We're waiting to see if ES can catch up to this, because ES did not take this low. This is not considered SMT until CSD has happened. So write that for your notes. SMT is not valid until you see CSD. So right now, even if on the daily time frame, we can even use this wick, right? We can pull this wick to the side. If we close below halfway, then you're still bearish, and we could close this daily candle could close bullish, and then tomorrow, which tomorrow's NFP, tomorrow we can reprice higher. We're still inside this range. We can reprice higher, sweep this daily high, right? We do a stop hunt on that daily high, and then reprice lower. So tomorrow can do this, and then you know target these other lows. So I'm just kind of giving you ideas how you can look at the market. So let's zoom back into our hourly time frame. So here we left these equal lows. We have another low here. We have another low here. So you have to learn to spot the liquidity. And the way you do that is by trying to see where's the probabilities of targeting either lows or targeting highs, right? The only highs that we have is here, here. We have these, but they already got swept, right? We came up here, we swept these highs. Look at that. So let's look at our 15-minute. All right. So do we currently have SMTs? Yes, we have SMTs. These highs were purged by NQ. All of these highs, which is yesterday's Asia highs, which is a time cycle. The previous Asia cycle highs were purged by NQ right now, and the Dow Jones has not swept these. So I'm going to show you. I'm going to switch to the Dow Jones so you can just kind of look. So these highs up here, all of these highs have not been purged by the Dow Jones, but they've been purged by NQ. Okay, so what do we got to do now? We got to look at a time of interest. Are we inside a time of interest? Yes, we're inside a time of interest. Let's zoom in again. So we currently have those SMTs, right? We're still bearish on the higher time frame. Let's see. 10:45. Here's a fair value gap. We're closing below these fair value gaps. We want to look for another form of manipulation, another form of SMT to have an entry. Okay, because I don't want to just pull the trigger. I mean, if you want, you can pull the trigger there, but I want to see another form of manipulation, another form of SMT, a fractal SMT, if you want to have precise stop losses. Okay, if you want a small stop loss, then you want to have it wherever there's a fractal SMT. All right, because here it looks like we're just going to nosedive, but we got to stay patient. So right now, here below these lows, this is an order block. I'm going to label it. So let me zoom back out so you can get an idea on how I'm working these market maker models. Okay, so I'm going to zoom back out. So how do I see this market maker model? It's a market maker sell model. Okay, so I'm gonna zoom in on this 9 o'clock candle. I'm seeing this as your manipulation. This is your buy side of the curve. So what am I doing now? I am waiting for my sell side of the curve. You see how I'm spotting these fractal market maker models using time cycles? Buy side, sell side. We swept these highs. There you go. These are your time cycles. Asia, you see Asia is all consolidation. So here you have equal lows. This is your sell side liquidity. This is your low hanging fruit on your higher time frame, okay? And then you have your Asia lows. And I'm breaking this down to you. Hopefully it's making sense. That way it can open your eyes to how I spot these market maker models. Because once you can spot these fractal market maker models, it becomes pretty easy. So if you do it with SMT, your probabilities are much, much higher. You do it inside a time of interest, your precision is much, much higher. So, you start getting fractal SMT, like these are SMTs here, they're fractal SMTs, and it looks like we're just gonna keep going lower. And what you can start doing is you can start pulling these PD arrays from the left side over to the right side. If this wants to, all right, whatever. It's not accurate, but you get the point. And once you can identify when we start going into a sell program, you can use practically almost anything, right? So if you would have caught this short from up here, you can start trailing your stop loss to minimize risk. Because if we're truly in a sell program, we don't need to keep coming back up and purging stuff. When we start disrespecting this side, all of this leg, if we start disrespecting it, start dragging your PD arrays from the left side, and we need to use those as resistance now towards the downside. Okay, so not only do we need to respect this leg, but we need to respect this leg as well. Okay, so disrespect this, pull them to the side. So if you had, let's say, if you did have this as an entry, and that was your order block, right? Start taking partials, however your risk management, however you tolerate your risk management, right? But this is how I hold my trades longer. I looked at my hourly and my 15-minute, right? I looked at my hourly. I know what happened on the higher time frame. What is my low? Because we're going to target a low. Remember, we're going to ping pong from a high to a low. The algo only cares about your highs and lows, okay? So now that we purged up here, we're going to purge a low, okay? And if we're wrong, start trailing your stop loss. I mean, who cares? If you get stopped at break even, okay, whatever, you know? It happens. Everybody gets stopped out. I get stopped out all the time, break even. But guess what? I take partials. Like, let's say right here, if I would have entered there, I would have probably already taken a partial right here. I would have taken a partial, and more than likely, I would have been break even, and I would have left my runners keep running, take more partials, maybe at another fair value gap or something. Target these equal lows. So remember, it's there's different ways that I look at these market maker models. So I look at internal range liquidity with external range liquidity, and then I look at whatever PXH and PXL. These are your time cycles, and this can be by purging daily highs and lows, monthly highs and lows, weekly highs and lows. You have your session cycles, your 90-minute cycles. There's even 30-minute cycles and 10-minute cycles. I don't get too much into those. I don't want to confuse y'all, but I mean there's tons of other micro cycles that you can also work with. But I mean, you should be more than enough profitable with working with 90-minute cycles, session cycles. If you understand your higher time frame, you understand order flow, then I mean That's really all you need, man. SMT. Make sure you follow your rules, stick to them, detach from the outcome. Okay. Uh, don't don't chase trades. Learn to spot these fractal market maker models. So hopefully, by me showing you just these little guides, it can help you open your eyes to these market maker models. But if you're new to the channel, subscribe, and if you like this type of content, then just go ahead and hit like. It lets me know that you like this style of lectures. But I'll catch y'all next time. Y'all take care.